Improve your credit score 9 ways. Having good credit is a crucial part of managing your personal finance as well. Your credit score is used to determine your credit worthiness. It often will determine if you get approved for credit, whether in the form of credit cards, car loans, or even a place to live. If you have bad credit, getting any of those things may be nearly impossible. Improving your credit score can be challenging, but it is possible if you have bad credit or no credit. There are ways to improve your credit rating, which we will share in this video. You can put yourself on the right track and begin improving your credit today. Here's how. Hi, and welcome back to another video of Finance Sense, where we cover all the latest trends in the financial markets and the economy. Before we get started, make sure to hit that thumbs up, and if you're new to this channel, subscribe and turn on the notification bell to stay updated with our videos. Now, let's get on to the video. First, take a look at your credit reports. Checking your credit history may assist you in determining what may be working for or against you financially. Obtain a copy of your credit report and then look over each report to see what is helping or hurting your score. Your credit score is influenced by a history of payments, low credit card balances, a number of credit card and loan accounts, older credit accounts, and a low amount of credit inquiries. Credit scores are negatively affected by missed or late payments. Large credit card balances, collections, and credit scores are negatively affected by missed or late payments, large credit card balances, collections, and judgments. One afternoon is plenty to complete this task. Thus, it is a good idea to check your credit report for inaccuracies on a regular basis. However, just make soft inquiries in order to protect your credit score. Ask your bank if you can sign up for their service so you can get notifications anytime your credit score changes. Many banks provide their clients with free credit monitoring. And after doing this, you will be aware of your credit score and may take action to raise it if necessary. Second, strategically settle credit card debt. The percentage of your credit limits that you are now utilizing is referred to as your credit usage. The simplest way to control your credit usage is to pay off your credit card bills in full each month. Additionally, it's a good idea to use no more than 30% of the available credit on any given card. The less you use, the better. After that, you can attempt to reduce it to 10% or below, as is recommended for raising your credit score. You should ensure your balance is low since it will affect your credit score, as the card provider will report it to the credit bureaus. To constantly keep your balance low, you can pay off the balance before the end of the billing cycle or make multiple payments throughout the month. This strategy has a substantial influence since on-time payments are the most crucial part of your credit score, which also considers credit utilization. Set calendar reminders to log in and make payments if you believe you'll forget to make payments on time. In order to be alerted when your balance exceeds a specific amount, you might also be able to add alerts to your credit card accounts. And this process works quickly. Your credit score will be computed using the reduced utilization as soon as your credit card reports a lower amount to the credit bureaus. Another strategy to reduce your credit utilization percentage is to ask for a credit limit increase. Most credit card companies allow you to request an increase in your credit limit online. All you have to do is update your yearly family income. You could receive approval for your increased limit in less than a minute. Additionally, you can call and request an increase in your credit limit. Third, pay your bills on time. No credit improvement strategy will work if you have late payments. Even worse, missing payments might stay on your record for up to 7 to 8 years. Call the creditor immediately if you are more than 30 days overdue on a payment. Pay as soon as you can, then ask the creditor if they would stop reporting your late payment to the credit bureaus if you do. However, it's crucial to settle the account in full as soon as you can, even if the creditor rejects your offer. Each month an account is recorded as delinquent, your credit score decreases. As you can see, your payment history significantly impacts your credit score. Therefore, it benefits you if you pay off debts on time to prevent having them stay on your record. The rate at which you've missed payments in the past influences the rate at which it works. Furthermore, the payment's lateness is also crucial. Fortunately, the impacts of late payments fade with time, and increasing the number of positive credit reports helps speed up this process. Therefore, the simplest strategy to raise your credit score is to prevent late payments at all costs. One approach to accomplish this is to create a file system, either on paper or online, to keep track of monthly bills. You can automate bank account payments for bills by setting up due date notifications, which will alert you when a due date is approaching. Alternatively, you can charge all or a portion of your monthly bill payments to a credit card. This plan presupposes you'll pay the bill in full each month to avoid incurring interest. It can be simpler to pay your bills and raise your credit score if you go this path and have a history of on-time payments. Keep in mind to always pay your payments on time and to stay away from unpaid debts. Fourth, limit the number of new credit requests and hard inquiries you make. The terms hard and soft inquiries are commonly used to describe the two types of credit history inquiries. A typical soft inquiry might entail you checking your own credit, granting permission to a potential employer to do so, financial institution with which you already do business checking your credit, or credit card providers looking into your file to determine whether they want to send you pre-approved credit offers. Your credit score won't be affected by soft queries. However, if you have a lot of hard inquiries, your credit score may suffer for up to 2 years. Hard inquiries include requests for a new credit card, a mortgage, a car loan, or other forms of credit. A few hard questions here and there are unlikely to make a significant impact, but a lot of them in a short span of time will affect your credit score. Banks can assume that you need money because you have financial difficulties, making them think you are risky. Even if getting new credit tends to raise your overall credit limit, it is best to avoid getting it for a while if you're aiming to raise your credit score. Also, eliminating hard inquiries from your credit report will somewhat, but not considerably enhance credit score. Recent hard inquiries only account for 10% of your overall score rating. While you should make an effort to remove any inaccurate inquiries, it may have little impact. Fifth, make yourself an authorized user. If a family member or relative has a credit card account with a high credit limit and a history of timely payments, ask to be added as an authorized user. To be safe, ensure that the friend or family is trustworthy and that the account reports to the major credit bureaus. Then, the account will be reflected on your credit report. By having authorized user status, commonly referred to as credit piggybacking, you can benefit from the primary user's track record of timely payments. It has the advantage of improving your credit without requiring the card's owner to give you the authorization to use it or even the account number. If you have a poor credit history, it might have a significant impact. The impact will be less evident for those who established credit who are making amends for past mistakes or reducing their credit utilization. Additionally, you must discuss this request with the account holder to determine if access to the card will be granted to you or if you will only be listed as a user with permission. As soon as you are added to the account and the account holder reports to the bureaus, your profile will be raised, which allows this to work quickly. As long as the individual you want to be an authorized user for has a secure account and is an individual you can trust, this approach will be simple to use if you struggle with the other choices. Sixth, maintain old accounts open and resolve delinquencies. The length of your credit history matters, and a long history is preferable. The age of credit component in your credit score determines how long your credit accounts have been open. If your average credit age is higher, lenders will have the higher perception of you. Keep any previous credit accounts that you are still using open. While the credit history for those accounts would still be on your credit report, closing credit cards while you still owe money on other cards would reduce your available credit and increase your credit usage ratio, which, in turn, might reduce your score by a few points. Seventh, think about debt consolidation. Your credit score may temporarily decline if you enroll in a debt consolidation program, but as long as you make your payments on time, it quickly recovers and you are eliminating the debt that was a source of your problems in the first place. If you have a lot of debt, it can be advantageous for you to get a debt consolidation loan from a bank or credit union and use it to pay off all of your unpaid bills. If you can obtain a loan with a reduced interest rate, you will be able to pay off your debt faster since you will only have one payment to make. Doing this could improve your credit score and reduce your credit utilization rate. Similar to this strategy is paying off multiple credit card account balances with a balance transfer credit card. These cards usually offer 0% interest on balances during promotional periods. However, be mindful of balance transfer fees, which can range from 3% to 5% of the transferred amount. 8th, settle maxed out cards in full first. It is recommended that you pay off the card with the greatest credit usage rate first if you have more than one card, especially if the debt on one or more of them is close to the credit limit. You would have been able to raise your credit score by utilizing this strategy. 9th, look into quick loans. Consider asking for a quick loan if you have poor credit and cannot find another solution to improve your score. These are often small loans, and the credit bureaus receive information about their repayment histories, which might raise your credit score, but you should only make use of this as a last resort. Raising your credit score is a worthy endeavor, especially if you want to apply for a loan to fund a major purchase or for business purposes. It could take a few weeks or even months after you start making changes to raise your score before you begin to notice a difference, but strive and be patient to see results. It appears that we have reached the end of this video. Thank you for watching this far. Please subscribe, give a like if you enjoyed it, and comment your thoughts below. This is Finance Sense, helping you keep up with all the latest trends in the financial markets and the economy. Stay safe, and I'll see you in the next video.